Do you ever feel like your finances are scattered across too many accounts? Like bills sneak up on you in the worst possible time? Or that managing money takes more energy than it should? Today, I'll share with you 5 strategies that I use with clients to cut through the chaos, automate smartly, and create a system that almost runs on autopilot. I'm Dan Pascone, founder of Tailored Wealth, and we help executives and business owners to design financial systems that give them more time, less stress, and a life that feels more organized and intentional. But before that, let's walk through the very first step, because most financial chaos comes from having too many moving parts. Strategy 1 is consolidate and declutter. The more accounts you have, the harder it is to keep track, and the easier it is to make costly mistakes. One client came to us with 14 different investment accounts across 6 different institutions. It took him hours each month just to gather statements, and he often missed key performance details. We consolidated to 3 main accounts aligned with his goals and set up one simple, secure dashboard. Now, once he logs in, he sees everything in one place, and the system does the tracking for him. Consolidation doesn't mean putting everything in one investment and ignoring diversification. It means reducing administrative friction so you can focus on strategy instead of chasing statements. When you cut clutter, you don't just save time. You reduce the mental load, which makes it harder to make smart financial decisions. Strategy number 2 is automate the essentials. Automation isn't just about convenience, it's about consistency. A senior VP I work with travels intentionally 40% of the year. Before automation, bills were missed, savings was inconsistent, and tax payments were last-minute scrambles. We automated his payroll flow and put a set percentage to investments, pre-scheduled his equity sales for RSUs, and automated his quarterly tax payments. Now, whether he's in Tokyo or Toronto, his money moves exactly where it needs to without him having to lift a finger. Early in my career, I told myself I'd manually transfer money to savings each month. I was disciplined for a while, but during my busiest quarters, I skipped it. And when I finally automated those transfers, my savings rate went up by 30% a year without changing my income. One pitfall to avoid is automating the wrong amounts. Review this quarterly to adjust contributions, especially if your income fluctuates or your goals change. Strategy 3 is to create a core accounts structure. Think of your finances like a well-organized office. Everything has a place and you know where to find it. For high earners, I recommend 3 main accounts. Number 1 is the income hub, and all income flows here first. 2 is living expenses, which covers your fixed and variable monthly costs. And 3 is wealth building, dedicated to investments, retirement, and long-term goals. A business owner client of ours with multiple revenue streams was constantly moving money between different accounts with no clear system. She'd sometimes overdraft one account while another sat flush with cash. Once we set up the core account structure, her cash flow became predictable, so she could track progress toward her goals in real time, and her stress level dropped instantly. Avoid mixing personal and business funds in the same accounts, as this creates accounting headaches and tax implications that take time and potentially money to untangle. Strategy number 4 is to schedule money maintenance blocks. Your finances may run themselves 90% of the time, but the other 10% needs your attention. We schedule quarterly money maintenance sessions with clients to review account performance, adjust for tax changes, and plan large upcoming expenses. One couple we work with calls this their financial date. They spend an hour reviewing everything, and then they go out to dinner. My wife and I do this too. Ours is on the calendar every quarter because if it's not scheduled, it likely doesn't happen. But avoid letting maintenance sessions turn into reinvent your entire plan days. This is about minor adjustments, not starting from scratch each quarter. Strategy number 5 is secure and centralize your information. If you can't access your financial data quickly and securely, your system isn't complete. We use a platform with one secure encrypted vault for all key documents. Statements, tax returns, estate plans, insurance policies, equity comp agreements. And also use a secure password manager for all financial logins. A new client of ours realized that if something were to happen to him, that his spouse wouldn't know where half of the accounts were even located. We built them a financial blueprint with account info, key contacts, and instructions, all protected but accessible by both spouses. Never store or send critical financial info in email. It's not only insecure, but also surprisingly hard to find when you most need it. Now here's the mindset shift. complexity is not a status symbol. Some people wear financial complexity like a badge of honor, multiple accounts, exotic investments, and a team of advisors. But the most successful clients I've worked with, they make their finances boring behind the scenes so they can spend their energy on what they love. Simple systems don't mean small results. They mean fewer distractions from what really matters, building wealth and enjoying it. The big takeaway, your finances should serve you, not the other way around. By consolidating, automating, creating core accounts, scheduling maintenance, and securing your information, you can build a system that works in the background while you focus on living your life. Start with one strategy, get it working, and then move on to the next. Momentum builds quickly when simplicity is the goal. However, here's the thing. Even with a streamlined system, most people struggle with one critical challenge: ensuring their money actually supports the life they want. If you've ever wondered how to enjoy life now while feeling secure about the future, you'll want to check out my video, Enjoying Today Without Sacrificing Tomorrow. Click here to watch and start aligning your money with your values.